Apparently from last time we have a show. So welcome to my show.
Thank you.
Thank you.
Nice to be here.
I want you to relax. I can already see you guys are sitting and a little bit
Oui.
tense, but it's fine. So it's very informal. We just talk like how we would normally. The whole idea of this podcast, when Farhad spoke to me about it last year, was to give good information out there. Just to give little snippets of information to the people that sit and view this stuff on TikTok and because I mean you guys have seen the videos. There's some scary information that goes out about it, and it wasn't very comfortable for a guy like me to sit and stand. I mean, I find it difficult taking selfies in public at my age, and now I'm gonna sit and do a video show, and it's been a learning curve. So we've been trying it, and it's been good. For the longest time, I wanted my friend Vishal on the show, and we've had so many before, and we haven't got it. And the day that he comes with Pablo Escobar's mustache. So
I had a feeling you wanted me on camera.
Yeah,
That's why I
You
left
dressed
it
the
on.
part.
well, thank you for that. We can explain how that came about, but I'll leave that to you. So basically, what I want to start off with is just to have a simple conversation. Vishal, you know me the longest, and we've worked together for many, many years. I want you to. I've done that video on YouTube with Yaku Khos, and I talk about my fund manager, and I wasn't allowed to give names and everything. But that's my fund manager. So everybody knows who manages our money, and we did it correctly. And I want you just, and Chris van Staden is here from Old Mutual International, and I want you to just please introduce your guys selves and tell me what you guys do. Vishal, maybe you can give a little bit more background on how you fit into my business. And Chris, mine and your relationship is new, but also it's a personal story. That's what people want to hear. So please.
Yeah, so to take it back, I think you and I have been walking the road for 9 years now. That's how long we know each other. And what I do in Yaseen's business is I look after all your clients' wealth. I look after all your clients' wealth, and I do what needs to be done so that we can give them a good outcome and grow their investment capital at a satisfactory rate, and give them peace of mind that their money is in safe hands, and continue to grow their capital over time. You and I have been walking the road for 9 years right now, and we've changed your business in those 9 years, and we've changed the conversations that you've been having in those 9 years. So I'm quite proud of what we've achieved in the last 9 years. And to simplify what I do, I structure and I manage your clients' investment portfolios to give them the best outcome. And I do all the things involved and centered around managing an investment portfolio, looking at markets, understanding companies, doing research so that you don't have to do that, and you can focus on what's important to your client, which is managing relationships.
I must say, I think you're being a little bit modest, and I want to just jump in for a little bit because, I mean, definitely 9 years ago when I had a business, I didn't know what I was actually getting into, Chris. I mean, we had this conversation in the car yesterday. I never knew how investments existed in the form that I have them now in my business. And Vishal helped me understand that, I spoke about it on camera with Yaku in Cape Town, talking about how the conversations went from, please give me a 500,000 for a local portfolio to, we're talking 20 and 10 million rand at a shot now.
Yeah.
And I mentioned it on camera that we have those conversations confidently. And you have given me the ability to sit and understand on that level. And not only that, he's the best fund manager for private clients for the whole year. And that's not something that we want to gloss over.
I think on another level as well, what's important is, and at a psychological or at a higher level, everybody needs to grow their capital over time, but not everybody understands what it takes to do that. So it's a lot of understanding, it's a lot of education that's happened in the last 9 years, starting with you first and then your clients.
Yes.
And if you build your level up, build your knowledge up to a point, it becomes easier for you to have the conversations. But in addition to being a fund manager or portfolio manager, my purpose in here is to help people understand what makes their money
The
tick.
educational role.
100%. Yeah.
That brings me to my next question. So my clients are the best clients in the world. I mean, you've met most of them. They're super nice people. They're genuinely good people. I wanted to ask you a question as to how has your start been from the first time we started seeing them? Now you've developed relationships with many of them. I want you to just to talk about how they've grown as investors. You know, so from their understanding. So what I like is I'll get a phone call, Chris, and it'll be Uncle Sir, and he said, "Listen, I just deposited 600,000 in your account. This is happening." So that conversations for me, I'm very proud of, because now my clients understand when the market is changing, when things are flat, and when to give us money, and when to give us more money. So I wanted to discuss that about.
It's also nice to experience that, because now there's not as much, or there isn't any fear and panic when you have a wobble in investment markets. If anything, a lot of your clients, most of your clients understand the opportunity, and that's when your phone rings to say, look, is this a good time? And I think that's testament to what we've done in the last couple of years. So we've built up their level of knowledge, made them understand that actually it's not a bad thing, and these periods will come from time to time. See them as an opportunity. Don't see them as a reason to panic and fear.
I think from my side, I've been doing this for 35 odd years, in various formats. And, thank you for the opportunity, because...
And before I even get there, so before I let you talk, so now we're taking our business one level up. So we got Chris, who's our heavy hitter for international money.
Mm-hmm.
So
but this is the next
Okay.
It's the next progression in your business now.
Now we're taking our clients.
But I also want to reinforce, as I wanted to say, in terms of the 35 years that I've been in this industry, I've come across advisors. And there's two things that stand out to me in terms of the interactions. Now, you and I haven't had a very long, standing relationship and a road that we've progressed on. But, immediately upon engaging your clients, and I said this to Vishal yesterday at some point, I said, the client base that Yaseen has actually accumulated fits his profile, his style. You can see it's people he wants to do business with, and they will reciprocate. The second thing which stood out for me quite heavily is the fact that your clients, you guys must have educated them very well over a period of time, because the engagements that I've had, people had insight. They didn't see this as, what are you talking about? I don't like what I'm hearing. Should I be doing that, etc. Everybody fully understood what the intention was and how preservation of wealth was important. In building this relationship with clients over time, you can only progress if they buy into the abilities that you have and what you put on the table. Nobody wants to put something on the table and you need to fight it every time and trying to explain it, etc. Your clients are obviously at this stage at a very specific level of education. And I can only prescribe that to the fact that you guys have been engaging them over a period of time. So
we've been holding hands for a long period of time. Yeah. But then it also, I don't know if you got the sense, but with every client interaction that he has, there's 100% trust.
There's a personal relationship. Yeah. In my past career, I spent quite a bit of time as a wealth manager myself. And if there's something that from an international perspective came through very strong, I was well trained by Barclays Wealth Management, because I did the Absa Wealth model for them. And if there's one thing that they really hammered down hard on us, is that as an advisor, as a wealth manager, you must become a trusted advisor. And I always bring up the explanation and an example where I had clients that would phone me and say to me, "Are you free tomorrow morning? I quickly want to take you to a property that I want to buy. I want your opinion about it." Not that I'm a property specialist, but they trust my view, the input that you can give, the insight that you have. It's a different pair of eyes, and you but you become that trusted advisor. I've had clients with R1 billion businesses, putting these statements in front of me as a wealth manager, saying, "What do you think about my business?" So that is important. But to me, it's also one step back. Yaseen is very early in his career and in his practice made the right decision. And that decision is something where a lot of the old advisors are still grasping to get the concept of, you are not the actual financial advisor if you're choosing funds for clients, if you're trying to manage outcomes in terms of performances. Your job is very different to mine. My job is very different to what Vishal does. And if the client understands the roles that you play, Vishal's role is ultimately to be responsible for the underlying performance of that portfolio, because that carries advice risk. It also carries advice risk in terms of what is your job. Your job is to provide structuring for your client. Whenever I engage clients, I always say that, you can talk to me about Old Mutual hasn't done well for me. We need to unpack that. Was it the fact that my product didn't work for you? Did I not protect you against CITES taxes? Did I not protect you, in terms of whatever onslaught there is against your wealth and your capital? Or did the underlying performance not come out as expected? Because that's a different discussion altogether. And I think if people understand the roles that you play, your fundamental role is a conductor of an orchestra. And you have different people playing different instruments for you. I'm just one of those instruments, and so is Vishal.
Correct.
There will be a legal advisor involved, and you've, in your practice, have access to a plethitude of resources that, most people would pay hundreds of thousands of rands just to be able to see these people. I see that on a daily basis. I have tax consultants on books that would charge you 10,000 rand a consultation, and those people are available if you want them, but there's also in-house expertise that will also share a lot of that information.
No, you're absolutely right. I mean, we're lucky and we use our legal advisors and accountants quite a bit.
Absolutely.
We have that. And I mean, if you look at, we use Dillian Harris, and she's got so many qualifications it doesn't fit on the wall,
I've known Dillian for many years,
and I mean,
yes.
if you had to ask her for a consultation, it would be huge amounts of money.
Yes.
And she does it for our clients on a regular basis. So, no, 100%. We got, and it took me a while to sit and understand that my role is to call in the specialist.
Is to accumulate the team. I mean, as a team manager.
Correct.
Yeah.
I need to vet him to say, listen, this man is trustworthy. I trust him with my heart of my clients now. And once that relationship is built, he must look after the money.
Yeah.
And we've been doing it over the last 9 years. And I think we've not to say it's always been smooth. It hasn't been. And we've had our ups and downs, and we've built a nice, decent investment book.
There will be ups and downs. There have been and there will be in the future. It's how we manage the expectations, to give your clients the right outcome. But I think a lot of your clients, all of your clients, are at the place where there's a level of understanding that when the proverbial popo hits the fan, that everything is going to be okay. They are in good hands.
Yeah, no,
Everybody's accountable, you see, and I think I want to use the analogy of a conductor again. As a conductor to the orchestra, people don't realize in a symphony orchestra how important that conductor standing in front there is, because he points at certain and he determines levels and he keeps people responsible for the outcome that they need to deliver. And there's a big responsibility upon you to surround yourself with the right expertise, because, I mean, the expertise are all out there and everybody has an opinion, but it's to get the right people in there, people that you trust, and that's your responsibility, is to find those people and surround you with that. And then our responsibility is, when we do pitch up, we pitch up with our best game, because I also need to understand that I can, in a town like Polokwane and Limpopo as a province, I can close down your business overnight, by doing the wrong things. If Vishal's not giving the performance we should, etc., overnight, your name could become a swear word in this town, and that closes your business down. So we have a responsibility to build your profile and build your business, and that's hopefully what people like us should be bringing to the table.
No, it's absolutely right. And I mean, that's why before we invited you to Polokwane, we went away with you, we got to know you, we got to speak to your friends about you.
Seen me at my best and my worst.
Your best. They always say if you want to know someone, travel with them.
Yes.
Yeah.
We've traveled recently quite a lot. So no, for sure. Chris, what I wanted to ask you is about Old Mutual International. I mean, so basically, what we're trying to do is Vishal grows the wealth, right? Simplified, and you take the wealth and you protect it. Yes. We have clients that have fairly large portfolios, and international income is where we want to take them. I mean, it's one thing growing your wealth in South Africa. It's another thing growing wealth internationally. It's a whole different ballgame. It's where we need to earn money in South Africa and grow the wealth overseas. Am I right in saying that?
Working in the sun, saving in the shade.
Correct, right? And the problem comes in is that when we're growing this money internationally, we want to also have it looked after so that it's accessible. There's no other unforeseen circumstances, unforeseen taxes and expenses that we don't see. And that's where you come in. You come and you wrap up that international investment or our international holdings in such a way. So I want you to talk about the things that people need to be aware of when they have money overseas, please.
All right. So normally when you start these discussions around offshore investing, it's an easy one. I can, with one word, most probably convinced any client to take money offshore, and that word will probably be Zimbabwe.
Yes.
You know, but I also say to people that, you know, the people that have survived in Zimbabwe are the guys that externalized their wealth early on.
Correct.
And still living in a lovely, beautiful country, you know, but bringing in the dollars as they require.
Yes.
So my case for offshore, you know, I always say, this is my elevator speech, is the 5 points. And you've heard me mention this a couple of times over the last day, you know, but it starts off with the structuring. You know, as Chris Portita says, that fundamentally, you know, you can't correct with returns that which you've lost through incorrect structuring. Structuring is your job, returns is his job. My job is to provide you with that vehicle that's going to protect you. Once people, you know, buy into the fact that they need to have offshore exposure, and South Africans have been offshore light in certain instances because of regulation and where, you know, our Reserve Bank rulings were taking us over time. But there's also been people that have externalized money in various formats and still do on a daily basis. But fundamentally, you know, people tend to jump from, I'm either in South Africa, and if you build a case for offshore, then I'm going to go and put my money in a bank account offshore. And I say, that's fine. At least you've taken the first step. You've taken the mindset that you and your wealth, you do not need to sit in the same jurisdiction or the geographical arena. You know, your wealth can sit anywhere in the world, and you can be anywhere in the world. But you need to protect that wealth. And it's fundamentally about the 5 points. You know, the 5 points is protection against a political environment which is unstable, volatile at times, etc. You know, a economy which is very small in comparison to the rest of the world. You want to be shopping at a larger market. You know, the third one is ultimately protecting the buying power of that wealth, and that fundamentally speaks to the currency that we have. And we all have our views on where the currency is going to go. Look at what's happened in the last day. You know, just fundamentally. And it's not something that, you know, we hope will happen. Nobody wants your currency as weak as it is. But we all need to understand that if you've got money overseas and the currency is weak, at least you're benefiting from that. So it's about both sides of the fence. I am a South African. You know, I have family and my children are here, my grandchildren are here. But fundamentally, I also do realize that you need diversification in your life. And that diversification also plays itself out in terms of growth over time. There is going to be a time when the South African market is going to do exceptionally well because we are a robust, bouncing market, and this is where you want some exposure. But you also need to balance that with an offshore exposure. What that perfect percentage is, we can have a whole podcast on that. That's a different discussion. But then people don't realize is the minute you have money offshore, certain aspects, you know, come into play. And those aspects are invariably negative because governments worldwide are all looking the same as South Africa in terms of where can we get most taxes from everybody that either invests with us or are involved with our markets, etc. And people don't seem to understand the principle that residence-based taxation is what makes the world go round. So if you're a South African and you have money overseas, South Africa needs to know about that. They need to know about it, and the reporting way is through SARS, but ultimately in the background, the Reserve Bank sits there. And they both want to know. The one wants to know, so what are you earning on that money so I can tax you on it? And the other one says, just because you're a South African, I want to know what you have abroad, otherwise I will fine you if you're not telling me about that. That is something that's important that we do and protect against. The second one is, you know, we all understand nobody wants to pay taxes. But you've got to try and get those tax rates within parameters, within legislation as low as possible. And that's exactly what we do in our product structure. I'm not going to go into the detail of percentages, etc., because I don't think it's important. But fundamentally to understand that you can be taxed in rand or you can be taxed in base currency, you can be taxed ultimately in a product or outside of a product in your personal capacity. The best way to do it is fundamentally the way we do it, and they call it the flagship product. We've been doing it for 25 years. Yeah, the other one is countries worldwide, such as the US and the UK, unfortunately, also levy CITES or inheritance taxes on CITES assets on anybody that invests in their discretionary environment, whether you have stocks on the FTSE or whether you have stocks on the S&P, etc. Upon your death, there will be certain CITES taxes payable, you know, and it could be as high as 40%. Yes. The minute you put it into the right structure, you take that CITES out of play completely. You know, those are the kind of things that you need to protect. For us, one of the biggest benefits and risks there are in any offshore investment is the legacy capital on how do you pass that wealth over from one generation to the next. 90% of our clients are wealthy in their own right. They don't really care about this wealth. This wealth is for the next generation and generations thereafter. I often talk about that legacy of being able to send your children to Oxford and Harvard. I mean, that must be the best accolade for any grandparent. But fundamentally, you need to plan for something like that, because I do see it 2-3 times a year where clients slide an HSBC statement across the desk to me and say, Dad had some money overseas, you know, he's passed away, can you help me with this money? And I'll say, I can't help you, but I can tell you what we do. You do this, you go into probate, you appoint a solicitor in London, you pay him. Often you have to fly there to go and see this guy. It's going to be very expensive. I've had more than once people tear that little statement up and say they can have it. It's just not worth it because it's going to cost me more.
So in actual fact, that's the real reason why I found you or why I looked for you. Is one of our clients had a similar story. I mean, his dad and uncle had bought for them properties in the back in the day, and it was so hard to actually access that hard-earned money. It was impossible. So when I found you, the whole idea of getting you together was to wrap that product to give us ease of access to it. And the bonus came into the fact that taxes are going to be better. We don't have to speak to a lawyer that side. It's accessible on my app. So those things all became a bonus, and it became a no-brainer to say, listen, all our clients have got international money, or all the clients that we deal with should have international money. And they should start growing it properly.
Yeah. And you can no longer hide that money, with common reporting standards worldwide, where 80 countries of the OECD countries have actually, subscribed to that whole concept. In the past, you could hide a little bit of offshore capital and eventually try and siphon it back into South Africa or into a new name, etc. These days, it's absolutely impossible to do that. So that fundamentally, in order to get that transfer take place in the easiest possible way, and not always, in terms of just bringing it back, that's possibly the worst possible thing to happen.
100%.
How do I keep it there with control over that money?
That's the thing.
What was happening in the past is any portion of your capital, if reported correctly, if it was offshore, could be actually delaying the winding up of your estate by years. By just having that little portion of money. And it's often insignificant amount.
Correct.
But it would cause a delay. So fundamentally what happens at the moment, if you're doing it right, within 10 days after proving death, the beneficiaries could be the owners of the contract. They have the option to leave it there or bring it back ultimately. But again, it's about that structuring that you need to put in place. Because if you're not doing it through that whole process, your executor becomes responsible. He's the person that signs off and says, I have accounted for all the assets in this estate.
Yes.
And if he doesn't do it right, he can be held liable. So what do executors do? If they're not sure, they will delay that until they have confirmation that there's no offshore assets. And they have ways and means of finding out, I can tell you that.
No, it's absolutely true. And that's the thing for me. It's the next level of let's grow our money and let's look after it to give them access to it.
Yeah. I have a lot of clients at the moment that are sitting with money in trusts, which have been in offshore trusts for many, many, many years. And the biggest gripe and groan there is we don't have access to it. It's difficult to get some of that money back, etc. We wrap an offshore trust for you. That investment portion of that trust could be wrapped. Suddenly you're talking to the local people and we're doing the work on your behalf offshore. If you haven't dealt with different time zones, with different paperwork, with different languages, etc., you don't know what it is to manage assets. I've got a client now, he's leaving this morning, flying to Poland, to try and go and resolve his mother's investment, selling of a property there. He's bringing her back to South Africa, etc.
And Yaseen has a client that needs to go to a different part of the world to sign a document to keep his account open.
Exactly, just to have access to his capital.
Yes. That's not
That's
easy.
scary.
That's not easy. The man works his ass off. Sorry, can I say ass before? He works his butt off to sit and earn the money. And now he's diversifying his investment like he should be doing. And now he sits with all these problems of I can't access my money and I got to take a flight out to go and fix it up. And that's where you come in. We wrap it up so neatly in a bow to say, listen, buy something with your money, use it, your children can have it, and that's how it carries on.
And again, these kind of structures that we do often have limitations in terms of liquidity, etc. And that's often what scares a lot of people. Yes. I don't want to put it in there, but do I have access to my money, etc. And if you're doing it right, you can have access to your money from day one, and you can have multiple withdrawals, etc. And you can have those withdrawals paid out overseas, or you can have them paid back into South Africa, depending on where you require that capital at that point in time. And you can alternate between the jurisdictions. So, and we'll pay it out to any bank account in your name anywhere in the world. So it's fundamental, if you really understand control of wealth.
Yes.
Just to get back to that continuation of wealth, which is also an important subject. And I see a lot of clients, and when we heard the story over the last couple of days, dad had the money and we put his brother on as co-holder, or dad had the money, we put mom on there as a co-holder. There is going to come a time when both parties are going to pass away, regrettably. It's most unfortunate, but that's what people do. Yeah. What do you do then? And we've really done a lot of work in terms of embedding continuation of that wealth. So we have a owner of the contract, we've got a primary beneficiary or beneficiaries, we've got secondary beneficiary or beneficiaries, and you can multiply add beneficiaries as the layers starts peeling away. So this money can be offshore for the next 100 years.
Yes,
That's the way it's done.
years.
Absolutely.
Thank you for that question, Vishal. Also, what I wanted to talk about, that was one aspect of our clients that have the wealth and have to want to go also. Another thing we need to focus, or I need to focus on my business, is our youngsters, the guys sitting behind the cameras, they need to also start investing. I mean, if they want to have, I often say being wealthy and being rich is two different things. Being rich is money-based, sure, whatever it is, but the way I understand wealth is having time, and you cannot buy that time. So being wealthy is being clever with your money from the start. So when it comes to these guys that tell them, listen, start saving from a young age and do this and do that, and then they'll get to these conversations of international income. And so I asked when I knew you guys were coming, or when you were coming, there's a lot of people that we asked, listen, what do you want to know and what do you want to ask? So I have a few basic questions. I know it's basic stuff, but I want to put it on camera, and I just want to get your guys.
But just to
opinion.
talk high level to what you just said,
Yes.
okay, it's the younger generation coming up. It's they should be thinking about investing. Everybody should. The next big shift in the world in our lifetime that we will see is the passing of wealth that's been created right now by our parents and people who are, as you said, are wealthy to the next generation.
Yeah.
And a lot of it's going to be done inefficiently,
Yes.
and some of it will be done efficiently, which is why the conversation with Chris is quite important today, because you can't put a price on time, because now people have to either go overseas to arrange documents or wind up in a state or whatever the case may be. So in your business, you do have clients with this need, and the efficiency of that transfer of wealth is going to be critical for your clients. Chris mentioned offshore investing, and he can speak to any client and get them to invest offshore. That's I have no doubt he can do that. But for me, as a fund manager or as an investment manager, the case for investing shouldn't be should I invest offshore, should I invest onshore. It should be where's the best opportunity for my money to grow.
Yes.
Where do I think the world is going to be going in the next 5 years, and in the next 5 to 7 or 10 years? Where do I think I'm going to grow? I'm going to get a better opportunity set for my capital that I've earned in my business to invest. It's the same as thinking about a business decision. Do I want to start a franchise or a restaurant? Do I put it in this location or do I put it in that location? Where's the best opportunity set? So for me, long term, and what we're going to do in your business is get people to think along those lines, because you talk to somebody to say invest offshore. Okay, cool. It doesn't explain to me just yet why, how. Let's think about the opportunity set. Where's the best place that my capital is going to grow?
And it could be South Africa.
It could be.
And it's a waiting thing often. It's not here or there. It's a waiting thing and a positioning over time that actually builds that wealth.
Correct.
I want to make one comment around the wealth that you said for the youngsters, in terms of wealth is created over time. And wealth is only created because somebody like yourself has the insight to go and speak to a client and help him. And I heard some of the discussions that you've had yesterday in terms of life cover, etc. When do I take it? Do I have enough, etc., etc. And that is wealth creation over time. I also often sit with clients, and clients have, and this is, it's testament at the end of the day in terms of how you've educated your clients. Something that came to the fore so quickly. I've dealt in this market for many, many years. And invariably, if you talk to entrepreneurs and business people, the first thing they say is, can you do better than I can do in my business? Why should I give my money to you? I can do 30% return on capital. And none of your clients came up with that answer, and they were all entrepreneurs.
Yes.
And I was ready for that answer.
Yeah.
And fundamentally, in my mind, it's actually quite an easy answer.
Yes.
Because wealth comes in 3 buckets. The one bucket is your emotional bucket, and you have a lot of that in your community and in your culture. Where it's a family home. In the other cultures, you have a farm, et cetera, et cetera. And that's not something that you sell overnight. It's something that you accumulate. It's probably something that you're going to hold. And I have in the black cultures a lot, the old cultural home. We want to buy it, especially once they get to a certain level of wealth. They say, I'm going to buy my old cultural home. I want my mom to retire there, et cetera. And they won't sell that. They may change a little bit to that. On the other hand, you have the client with the entrepreneurial bucket. And that bucket is where he knows what he's doing, and I can see your clients all know what they're doing. They're making mega, wealth in terms of that. And I probably don't want to compete with that. No. They know the risk that they have in that. They know how to do it. They know what they do. They've been doing it for long. It's part of the education process of their children. They're getting their children to become the entrepreneurs of the next generation, etc. But somewhere in the middle is where we play our role,
Correct.
is in that investment bucket. And I say to clients, if you're making excessive capital in your entrepreneurial bucket, what are you going to do with the difference? You can't keep on reinvesting. Do you know how much money is sitting invested in businesses that people don't want to distribute as dividends or income or bonuses because of taxation, etc.?
100%.
But at some point, they're going to have to make a decision about
It
that.
is inevitable.
It is inevitable. You've got to build that wealth bucket in the middle because that also creates diversification.
Absolutely.
If you're selling an emotional asset, whether it's the farm, you're probably going to buy another farm at some point in time because it's in your blood. But you've got to park that money somewhere. Do you park it in your business? No, you park it in your wealth bucket. And you expose it to market or not. And that ultimately, again, once you require it, will be liquid to take out to do the next step. It's about, understanding who plays what role in what bucket. I don't interfere with your business. Allow me to manage the investment bucket, as we've agreed.
Correct, and build your passive income. Because there's only so long you're going to sit and be able to run to the shop every day, 9 to 5. You may not want to do it in 10 years' time.
Correct.
And if you hadn't started 10 years ago, you're going to start now and you're already 10 years behind the game. So yeah, we've had this conversation. Indians love telling you, I'm earning so much in my shop and you come and you give me 5%. Can I show you the door? But have a cup of tea before you go. Those type of things. So we've had these conversations and I'm happy to say my clients understand that they need both. There's the ability to...
And that was very apparent in the discussions that we've had.
Yeah.
None of them spoke about our business and how do you compete with that. It's all about how do we fulfill a need around the business.
Correct, and how do we enhance their life? I think that's the important thing. It doesn't come down to returns or so much, it comes to freedom and how do we enhance their lives, basically. So, talking on that, you spoke about it just now. Let's talk about diversification a little bit. Very, very simplified. Vish, you taught me this back in the days. What is diversification for our younger people?
So simply put, it's the old age example of putting all your eggs in one basket or going to the casino and putting everything on black. You've got a big risk and your outcome is certainly very, you've only got one particular outcome. If you put some eggs in this basket and some eggs in that basket and some in the other basket, you're spreading your chances of not having good performance out of the chickens that you're going to grow or whatever the case may be. And to bring it back to an investment discussion, when we diversify an investment portfolio, it's the discussion, should I invest onshore, should I invest locally, should I have growth assets or should I have income assets? And diversification is saying I want a little bit of each, but based on my long-term goal, which is to grow money, I want more in the growth side, but I still want some income and some cash assets in the portfolio to diversify me, so that when an investment or market wobble comes, I don't wobble as much as the market does. I have some protection built into my investment portfolio.
Yeah, to me, diversification is a very similar analogy in terms of the eggs in one basket. It's like a horse race. Are you backing on one horse, hoping it's going to win and you're going to make all the money? If it's out of the blocks and it breaks a leg, you're gone. You may as well go home that day. Whereas if you've got your bets spread across the field, you're probably not going to have the best outcome at the end of the day, but you're probably going to have an outcome. That outcome will be in your favor. And to us, diversification is at a lot of different levels in terms of, as Vishal has said, it starts off with, am I in South Africa, onshore, offshore? If I do offshore, what exposure do I take? And how do I diversify from an offshore perspective? The minute you go into the asset classes, am I in bonds? What type of bonds? Am I in equities? What type of equities? Even cash has related instruments that you need to make certain decisions about. But that just smooths the ride quite a bit. And ultimately, that's the function of a good fund manager, is to understand through the models that they run. There's Black and Littman, there's so many other opportunities that you have. People tend to think it's a thumb suck, and I suppose for some people it is. But if you're really running that and you're doing it properly, you'll understand that there's actually a lot of science behind diversification. It's not just, well, I'll put a little bit there and I put a little bit there, and hopefully, if the one doesn't grow, the other one doesn't. But then you also have the black swan approaches that we spoke about yesterday, whereas 2022 was one of 5 events in the last 100 years where bonds and equities underperformed the market in very similar percentages, and that was unforeseen. But the market subsequently has come back again, so yes, there are these unforeseens where diversification would probably not save you all the way, but it'll be temporary by nature because it will bounce back, and that's diversification.
Can I give you a silly example related to your clients being business owners? If I run a supermarket and if I want to sell milk only, and my shop sells milk only. I'm only going to make money when people want to buy milk.
Yes.
And if I want to make a bit more money, maybe I'm going to put some bread in my shop as well. So I'm down diversifying my income stream. I've got more lines of products. Think about it from that point of view. And that's why you have many shelves in a supermarket with many lines of products, because if you only sell one thing, if you only invest in one thing, that's the only time you will ever make money. You know?
Yeah. And your successful entrepreneurs, and I'll bet my bottom dollar on it, that you have as clients, will probably not only have a shop with multiple items and lines of sale. They will also have multiple different types of businesses
Yes,
that
correct.
creates different lines of income. So if the wholesale retail business, as we saw yesterday, is not doing too well because of the economy, because of the spending patterns of individuals, etc., they probably has, as I've heard, a connection with a furniture shop where I've got a stake in that business. And that's diversification.
And that's education for our youngsters also. You don't rely on one stream of income. Yes, start on one because that's where we're starting in life,
Yeah.
but always look to develop more. That's how you really
To give
grow
you another
up.
silly example if you want it. It's not a silly example, but look at a company like Apple.
Yep.
It started off making phones.
Yes.
But as the world has evolved, now we have watches from Apple. They've diversified their income stream. We have an app store where people can develop apps and they sell these apps to their clients like you and me. It's another line of revenues. We have iPads, we have pencils, we have computers, So that's diversification.
Yeah.
If I do one thing, or if I sell that one thing, I'm limiting myself. I could make a lot of growth, but I could not as well, and that may not be the thing that people want all the time. So
you look at Porsche 30 years ago, and the story.
these are
about
real world
Porsche-
examples
yeah,
now of
Porsche was in
diversification.
trouble. I mean, the 911 is an iconic car. Everybody wants one, and they were struggling. They were struggling to make money, and one of the designers, I don't remember the whole story, but he came out and says, "Let's make an SUV." Like, how can you have a Porsche?
How
SUV?
dare you?
How dare you?
How dare you make a Porsche SUV?
Yeah.
And that deal went wrong, and that's the biggest.
It's the best performing, it's the best seller that they
Yeah.
have, yeah.
Companies as well, you will know better than I do in terms of Sasol, how they've diversified over many years. Sasol was a petroleum producer out of oil, and that's how they started. There was a big need for that at that point in time. But subsequent to that, the offspin to their businesses, they were price takers for many, many years because they were at the mercy of the currency and they were at the mercy of the oil price.
Yes.
But they've diversified their business so well over a period of time. And I don't say there isn't hiccups in that business, but with all the products that's been generated off the spin-offs of that business is
The chemicals and
exponential.
plastics business is,
Exactly.
it's how they've diversified their revenue stream.
And then a famous line we have: "We are long-term investors, we look for steady growth over time." That's our
Correct.
line, right? And I want to talk to you about the traders. I want you guys to explain what's the difference between a trader and what do we do. Simplify.
Okay, so
please.
we are investors. We are not traders, and we're investors for clients. And let's explain it this way. I want to buy a good quality business that can create profits every year, which means they can grow their earnings every year, which means they can pay out dividends to their clients every year, and ultimately increase their share price on a year-on-year basis sustainably over time. And as an investor, I look at what a business is going to be worth in the next 3 to 5 or 7 years. And if I see value in it, and if the price is attractive, and if those earnings projections and profitability projections match what we've experienced in the past, we're going to invest in this business. And we invest in it through the cycle, if I can call it that.
Correct.
And when I say through the cycle, it means through market underperformance and overperformance. As a trader, I would be interested in the share price only, and what that share price is doing on a day-by-day or week-by-week basis to try and make a quick profit. On a turn. And I want to ultimately buy low, sell high, and repeat again very regularly over a short period of time to try and make money in a quick fashion. And unfortunately, a lot of the time there's a lot of luck involved. There's a lot of external factors that determine what the price of a company that's listed on an exchange will do in the short term. And there are not many success rates out there. Yes, there are some people that are successful at doing short-term trading, but you hear the successes, you don't necessarily hear the losses. And
am I correct in saying, sorry Chris, one sec, am I correct in saying that when we find a company that we believe in, we invest in them with the idea of growing with them, taking part in their profit and in their loss?
We want to own
Over
this.
time.
We want to own a high quality business for as long as it's profitably possible to do so. Making changes if we need to, and those changes could be reducing our position size if the business has grown too much and it's a big portion now of an overall portfolio, or it could be adding to because there's been weakness and there's been another great set of results, and now this business is a bit more attractive at a price level. I want to add to it. Ultimately, that's when we structure investment portfolios for your clients. In my mind, my goal is at least 80% of these names need to be in the portfolio over a 5 or 7 or 10 year view. They are core holdings that we want to own, and that's the mentality we apply.
You see, in our business on the international side as well, there's a lot of that going on because the currency is one of our major factors. And if there's one type of trading a lot of people like, that they think they can get right, and they often try and do that, is timing of a currency. And if you don't understand what happens in the markets, I don't know what the currency is going to do tomorrow morning. I can't tell you what the rand dollar is going to be. We seem to see a trend at the moment, but I can fundamentally tell you that 5 and 10 years from now, we're going to be weaker than what we are at the moment. Because of the principles involved, the power of purchasing parity, that inflation differential, et cetera, et cetera. What traders would do is they would react on these short-term movements. Unfortunately, those reactions are noise. It's as a result of sentiment in the market and the noise that it creates, whether it is an election in America, whether it is Mr. Putin, attacking the Ukraine, whether it's the Israeli war, et cetera, et cetera. That's all noise, but you need to look through the noise. Mm-hmm. Because ultimately the objective and the end game is a lot better than what's happening at the moment. These short-term opportunities for traders come and go. They vary very quickly, and it plays out, as Vishal has said, in luck more than anything else. You'll make a buck here, but you'll also lose $2 down the line. But if you want that consistent compounding and wealth creation, it takes time.
That takes time.
Yeah.
That brings me to my next point. For our younger viewers, compounding, very high level. What is the power of compounding? And don't tell me Albert Einstein said it's the 8th wonder of the world. We all know that.
I was about to say it is the 8th wonder of the world.
So elaborate a bit.
Compounding for me is understanding that, the minute you're getting whatever you've made today, added to what you're making tomorrow, adding to what you make the next day, that's the reality of this game. You're not making money today, taking it away and putting it somewhere else. You're making money, and that accumulates and makes the pot bigger, which ultimately makes the next gain bigger, which ultimately makes the next gain bigger. I work in a farmer's market quite a lot, and we often see this in the industry. I say to the farmers, when you've got sheep out there and the sheep price suddenly falls out of the market completely, are you going to sell all your sheep? And they're like, no, I'm going to buy more. So it's exactly the same with stocks, because the market has fallen, you're suddenly not going to. But can you imagine, apart from the fact that the price of sheep is going to go up again, of mutton, or whatever you want to call it, fundamentally, those little ewes that you've got there is also going to produce, and that's the compounding effect. That's going to generate more over time, and so there's a big benefit of actually understanding that you buy an asset. That asset, and this goes back to gold. I mean, we often get this question around, is gold a good investment, yes or no? And all the youngsters would say yes, because everybody wants to own gold, et cetera, and especially the elderly as well, because that to them is the safe haven. We've seen gold do exceptionally well over a period in a build-up, to the elections in America, because any uncertainty in the world, Investment 101 says we defer to gold,
Yep.
and as soon as the uncertainty disappears, we go back into the market, and that's what's happened. But fundamentally, gold can't be sweat. There's nothing gained from it. And that
doesn't pay you anything to own it.
Exactly. And you're at the mercy of the price at a given period of day or time.
So does that bring us to our quote? I wanted to say a shout out to Trevor John. Is that a nice object to say, give your money a job?
Give your
Because
money.
Gold doesn't.
I'm not going to say it is going to cost me money.
I want to talk to you about compounding interest, and I want you to think about a big, tall mountain and a small snowball in the top. And you start rolling that snowball down the hill, and as it rolls, it gets bigger and bigger and bigger and bigger, and then it's this big. That's the power of compound interest or compound growth. It starts small, but you need a long period of time. And as you get to the bottom of the mountain, which is the end, you see the effect of compound growth. It's getting growth on the growth that you had last year, and then that compounding and getting bigger. So the snowball for me is the easiest way to explain.
So for my young clients, it's just starting to work in it. When should you start investing? One answer.
You should have started yesterday.
Excellent.
Okay. When do you plant a tree? If you haven't planted it 10 years ago, you better do it today.
Yes.
Same thing.
And for your younger clients, you can also say to them that they should pay themselves first every month.
That we have this conversation all the time. And then one more thing, there's a lot of things going on TikTok that bother me with regards to growth. So I wanted to ask you from an expert's point of view, realistic growth. The reason why I'm asking is I know the answer, but I want you guys to tell me. I'm listening to TikTok and people are telling me you're making 40%, 50% per annum, 30% per annum. These are unrealistic numbers. They're not, when someone tells you it's giving you his opinion, not advice, it's advice. At the end of the day. So I wanted to know from an expert's point of view, what's a realistic rate of return?
From my side, Yaseen, a realistic rate of return is what you, me, and your client agree on a realistic level of return is. And there's a couple of things to consider. It is what inflation is currently in South Africa, because ultimately the first goal of investing must be to beat inflation, otherwise your money is going backwards. To be able to beat inflation, you need to invest in a certain way. That certain way does present short-term risk, but long-term outperformance. We need to understand that risk, and then as a team, yourself, myself, and your client decided, okay, if inflation is 5, by how much do I want to beat this? Do I want to beat it by 1% every year, so get 6? Or do I think 8 or 9 or 10 is better? And generally speaking, most of our clients that we have together gravitate towards the 8 or 9 or 10% type of investment return. That's a good enough hurdle to beat inflation by, and it's by no means the same for everybody. But if we think about a way that we can grow our wealth in a fashion that doesn't take too much risk but does not take too little risk either, so we don't get it, so we get enough growth, probably that's where we tend to gravitate. As to getting 40% and 50% on TikTok, show me the piece of paper, show me the numbers. Can I verify it? And if it's verified, yes, that's one aspect, but sometimes this as if it's too good to be true, if it sounds too good to be true, sometimes and most times it isn't. So people just need to qualify what you hear on social media, and just take what you hear on social media with a little bit of salt, because there's a lot of stuff out there that you cannot trust.
To me, at the end of the day, it's starting at cash. If I sit and I come to you now and I say to Yaseen, I can give you 15% in a cash type of investment, no risk to you. I mean, there should be a red light going off. There should be red flags being, waved all over, because the market says risk-free rate is, let's call it 8% at the moment. I'm giving you that plus 7. Where are you going to get it from? What is the underlying? What are you buying? What risk are you taking? Because on a risk-return spectrum, you're ultimately starting off at cash, and then you take on a little bit of risk by bringing in bonds into a portfolio, which is part of your diversification, and it becomes an income fund. What should that give you? It should give you risk-free plus 1%, 1.5%. The minute you step away and you add to cash and bonds, a little bit of equities, you're starting to move into a balanced space. That should give you, let's call it risk-free rate plus 4 to 6%. So you can step away from it. Ultimately, you get to the ultimate end of I'm buying stocks. And even in stocks, there are low-risk stocks and there are higher-risk stocks. I always say to people, I grew up in an industry that we often spoke about the fool's market. If something is run by 50%, that's when everybody wants to start buying, because they think it's going to do another 50%. Right. And we have had examples, and there's a typical example in the market at the moment, of one of the Magnificent Seven, where everybody's saying, what is going to be next? And what is going to be the next Magnificent Seven that comes to the fore? And that's what good fund management is about, is to know when to get out of that, when that 50% is enough, and to start down weighting and to start finding the other gems to add to that process. Because one of the processes or investment philosophies processes that there are is momentum investing. And you can chase that up to a level until it comes down, and then you give back a lot of what you've gained. And that is about that expectation that he spoke about in terms of what would I be comfortable with. Now, we often get clients that say, but I want that return. And I'm the quickest guy, when I do financial planning, is to say, okay, well, here's 90% of the portfolio. Let's put that in a proper risk profiled approach with a strategy, and here's 10%. You're going to try and get that, because if you lose, you're going to lose your 10%. We've got your core holding, Let's play around with that. And we often see this in your game as well, where people say, I want to execute only. You just give me the platform. I'll do my own stock trading. it's an interesting game
It's
because
always interesting.
it does take time, it does take patience, it does take a lot of insight. I know the amount of time, portfolio managers spend sitting down, analyzing markets, listening to opinions, looking at commentators, analyzing stats, etc., and getting input from a lot of other people. Thinking that you can do that yourself? No. It's pushing it.
So basically, Vishal, Chris, everything in balance.
Moderation.
100%.
Yeah.
Everything in
Yeah.
balance. I'm happy. Any closing comments?
No, I just want to say thanks. This couch has been very comfortable this morning. I enjoyed speaking with you. And I look forward for another 9 years with you.
I'm looking forward to it, Chris.
Yeah, thank you very much for the opportunity. It's not often that we get time to really unpack what we do and how we do it and to put it into context. Often it's little snippets that you share. But this has given us the opportunity to really, expose the market, try and pull all the loose ends together from a financial planning and asset management as well as a structuring process into one little conversation. I think it's very valuable, and I think more of these needed to be done, instead of just talking about returns or just talking about new fans and ideas, etc. Your clients are very, very beneficial in terms of the way they add to your practice and the job that you do for them. I think it's a great opportunity, and thank you for this.
And I wanted to sit and also just one time say thank you so much for taking me on that Offshore International trip. You don't understand how it's opened up my mind, and not just about how much you guys can drink, but how much you guys can teach as well. It was really, really, really informative. I mean,
Your eyes were opened.
My eyes were open.
That's the kind of thing, and a lot of advisors understand that in order to be a good financial advisor, you need to be open-minded, expose yourself, be out there and learn. Because none of us know everything, because if you see, and we've spoken about the next step is possibly China, you need to go and look at China. You need to go and see what's happening there because your clients are asking you questions about markets. And if you haven't been or you haven't spoken or you haven't listened, I get invites from offshore fund managers virtually daily for webinars and discussions, etc. And I tend to attend as many of those as possible, not because I believe everybody. If there's one thing I hate is clients that phone me up and say, I saw this on YouTube, what do you think about the currency? What do you think about, the dollar and its collapse and all those kind of things? And I say, please do me a favor, listen, but broaden your view. If you start following one cult, that cult is going to change your mind. Yes. But if you're listening to guys, you suddenly at some point going to understand who the valuable insights are. And you only get that, by exposing yourself, traveling, talking to different people, etc. And the trip is but one portion of that, to go and experience those markets.
Absolutely. Good. Thank you very much. Thank you, Pablo.
It's my pleasure, buddy.
I'm not going to let it go.
I've walked in and I've seen this room, and I come here often, not as often as I should, but I've seen this room and I've walked past it a few times. It's actually the first time I'm sitting in this room. So thanks, buddy.
Fact,
in the spotlight.
In the spotlight. Yeah.
You were supposed to be here first. It just never happened. And I'm hoping to have a lot more conversations when you.
No, I'm sure we will.
Thank you for the opportunity.
Thanks, guys. Thank you very much.
Cool.